And I hope people do. I really do. But that's one of the things I wanted to talk about here. And there's another issue that I want to talk about that I think is even more important. And hang on, I'm just getting my screens set up here so I can go over that with you. Because I want to say something to, nope, wrong one. There it is. Senator Ron Wyden. Now, this is another very important issue I think we all need to talk a little bit about. And this is a big deal. And shame on Senator Ron Wyden. He's a Democrat out of Oregon. Shame on Senator Ron Wyden. And you'll say to me, well, Mike, what's the big deal about, what's the big deal about Senator Ron Wyden? What did he do? I mean, who is he? Well, obviously he's a Democrat out of, as I mentioned, he's a Democrat out of Oregon. And he came out, and on April 2nd, he came out with a bill, a proposal that he wants. And you can go to the Senate Finance Committee, or it's actually finance.senate.gov, under the newsroom. Under newsroom, you would then go to ranking member news. And I have the link here, and I'll have it at the end of in the description of the video. But he announced on April 2nd that he has a plan to ensure that wealthy people pay their fair share. Now, I was talking about the fair share, and it's very different, and I want to make sure people are very aware. Because you may recall just a week and a half ago, I was talking with Steve Hayes with the Americans for Fair Taxation. And he was talking about a fair tax, which is not the same as a flat tax, nor is it the value-added tax, or VAT, that Europe uses. So it's a very different thing. And that's not what Senator Wyden is talking about. What Senator Wyden is talking about is destroying businesses. Okay? He's talking about destroying inheritances. And that's a big deal. Now, he's made it sound like it's a really nice thing. I mean, he says, quote, everyone needs to pay their fair share, and the best approach to achieving that goal is to market system that would require the wealthy to pay taxes on their gains every year at the same rate that all other income is taxed. Okay, so he's going with this idea, to put it in simple terms. What he's trying to say is what we've heard from many Democrats. We need to tax the wealthy. We need to tax the rich. It's the same thing that Governor Cuomo has been saying for his first 2 terms in office, which has led to approximately 1.5 million people leaving New York State and a shortfall of $2 billion, $2.3 billion as of February of 2019, and increased taxes. I mean, even in 2000, he just came out with the budget for New York State, and he increased taxes. So this tax to wealthy idea only results in higher taxes for everyone, and it hurts more businesses and more people, and people try to run away from that, which means wealthy people will run away from the United States. But let's put this back into context with Senator Wyden. So this is what Senator Wyden says is supposed to happen. But if you're looking at the Pew Research Center and looking at their most recent data, and their article from October 6 of 2017, where they say they're taking a closer look at who does and doesn't pay tax in the United States, they show it in a graph. Now, the top tier, the top 0.1% of all tax returns filed, those are people who are making $2 million or more in taxes. These are the people that Senator Wyden is saying he's going to attack. And these people pay 20% of all taxes, all the things that the government's spending money on and overspending money on, they pay 20% of that. The very bottom, those people who make less than $30,000 in the United States, they pay 1.4% of all taxes. Okay? Think about that. The top 0.1% pay for 20% of everything. The bottom 43, almost 44% of America, almost half, pay 1%, 1.4. People making between 30 and people making between $30 and $50,000, well, they're 4% of all taxes that are paid. In fact, if you look at the bottom bracket here, people from 30,000 or actually 50,000 or below, people who make less than $50,000 in the United States, 61% of all people, more than the majority actually of Americans, pay about 5%. Actually, in total, 5% of all taxes that are paid. The top 0.1% pay 20%. The actual top 1% pay about 38% of everything. Now, this isn't the only thing to look at this. So it's already wrong to say that the wealthy aren't paying. They are. They're paying more than anyone else. But I want to also look at, Bloomberg came out with an article yesterday about this, and they mentioned that Wyden's proposal would reduce income inequality, but it would also dampen investors' incentive to save. That's according to Alan Ward of the American Enterprise Institute. That's important to understand. Now, let me break this down a little bit better for people. If people aren't able to invest, then there's a problem. Now, I know everyone says, oh, well, it's just wealthy people in the stock market. No, that's IRAs. That's 401ks. And maybe, and I spoke to Senator Wyden's office before coming on air today, and they have not come up with a bullet sheet explaining exactly how his bill is supposed to work, which no one understands how it's going to work. It's incredibly complicated to be able to do this. But what he says, what we understand is that, yeah, the rich won't make as much money because they're going to be paying a lot more taxes every year, but that just means they won't invest. They'll take the money and put it somewhere else. They won't buy property. There's a lot of other problems with this. It starts having a ricochet effect because, as according to CNBC, they're mentioning if you sold stock and you have cash proceeds, you have money and you can pay your share to the government. Okay. But if you didn't sell it, you don't have the money. How are you going to pay for this? And that's a big question. If people are paying for gains, he wants to tax you on money you haven't made. You haven't earned this. You didn't sell anything. It's just on paper. Where are you supposed to get your wealth from? How are you going to pay your bills? How are you going to pay your taxes on something you didn't have the cash for? It's just on paper. I looked at this in a couple of different ways, and I noticed that this is going to be great for accountants. It's going to be great for lawyers and tax accountants. And guess what? According to OpenSecrets.org, Senator Wyden makes about $2.2 million in his campaign coffers, donations, and he gets it from lawyers and law firms. Aren't they going to be making a lot of money? Yes, they will. He also gets about 2.1, almost 2.2 million from the investments industry. But that's something to keep in mind. I don't know. When I'm looking at this, and CNBC is going over in their article on April 3rd, they're talking about how this would hurt the financial markets, that this would drive this down. They say in their article, if the value of your business goes up by $1,000, you'd have to pay capital gains taxes, even though your business is just growing, but nowhere near stable or successful. Think about that. You got a business. If you decide to start a brand new business, you start from scratch. It has a value of 0. In your first year, the business has grown. It went from a value of 0 to, I don't know, let's say it's worth $50,000 because you have $50,000 in revenues that went through the business. You now have to pay taxes on $50,000. That doesn't mean that you actually made money, but the business is worth more. So it destroys your small business because now you have to pay taxes on that increase in value of a business that you may not be making a profit on. That's a problem. What about an inheritance? Let's say that your mom, your dad, your grandma bought stock. And not in an IRA, but they just bought stock. It's an investment for your college fund. And they give it to you, either because they die or because it's a gift. And that thing has appreciated. Let's say they bought it at $5 and now it's worth $500 or $5,000 or $50,000. Now you're not instantly going to be wealthy overnight. You're not Warren Buffett. But guess what? You have to pay those taxes on that. Where are you getting that cash? That doesn't mean that you are liquid for cash. It doesn't mean you have the money. Now you have to sell that stock, take all the hit of all the taxes that are due on that. That's a problem. This is such a problem because it sounds like it's really fair. Oh, we're going to be taxing the rich. Think about this. Warren Buffett would never be able to be worth what he is today. He would never become the great investor, the greatest investor known in the history of the stock market if he had to do this. This action by Senator Wyden actually is one of the worst things you could possibly do to the public because it hurts everyone. It hurts everyone. This has got nothing to do with helping people. And shame, seriously, Game of Thrones shame on Senator Ron Wyden for doing this. This is the single best way to destroy small businesses, inheritance, to destroy any future wealth. Think about that. If you think about the brand new investor, you're in your 20-somethings. You decide you've been working hard, you put some money on the side, not into a 401k, because it's not for your retirement, but this is for your future. You want to buy a house in the future, or a car in the future. And you want to use the investments, the stock market. Say you want to invest in Bitcoin, or which I wouldn't, but whatever. Someone wants to invest in Bitcoin or a video game company or whatever it is you want to invest in because they think it has a future and they want to grow and they want to be able to buy a house or they want to buy a car or pay off their college loans. Just an average regular person, part of the 61% of America that pays 5% in taxes, many of them getting tax refunds. One of those individuals. And you go and say, okay, I'm going to do that. And now, even though you're not stable, you haven't built up your career, you don't own assets, this is your first asset, and now you have to come out of your pocket with cash you don't have to pay taxes you can't afford on something you didn't make a profit on. Now, does that sound fair? Does that sound like that's whose income and how is it the inequality that is creating isn't for the wealthy. It's a consequence to the poor. It prevents people from becoming wealthy. And that's something I don't think enough people notice or enough people are aware of. Most of these plans that we hear that are coming out about income inequality and how to punish people who are rich almost always wind up hurting people who are poor. Governor Cuomo raised up through the single party system of New York, he went out and he increased the minimum wage for people in Manhattan, the fast food workers, to $15 an hour. You know what happened? Businesses closed down and fewer people are working. And they're working fewer hours. It hurt them. Just like the CBO told us would happen in 2014. And I did an article on that as well. We see this over and over and over again. They tell us that they have this great idea and how it's going to help everyone, except they don't think of the consequences. We'll raise up the minimum wage. Yeah, and we're going to watch businesses close and people work fewer hours and fewer people will have a job. We saw it in Seattle. We're seeing it in Manhattan. We see it everywhere that they do that. We see the income inequality. We're going to tax the rich. Okay, and just like in New York, they left. They left and they took their money with them. Under Obama, companies took their money overseas and left it overseas rather than bring it back into the United States, where when we did lower the taxes and we got those companies back, 4 million people got bonuses, 4 million people got pay raises. We had about 1 million jobs created because we lowered the taxes and those businesses came back. But under the other idea, oh, we're going to make it all equal, everyone leaves. They hide their money. It works out to be worse. If Senator Wyden is allowed to do what he's saying he's going to do, what's going to wind up happening is small businesses are going to be hurt and they're going to close because they don't have the cash. People who are getting inheritances from family members, they're not going to be able to pay the tax on the inheritance. You're going to see young people who want to start off building their wealth in their families in hopes of becoming the next Warren Buffett. They won't be able to because they can't afford it. There is no way I look at this, and I'm showing you CNBC, I'm showing you Bloomberg. There are articles out there, and they're all telling you this isn't going to work. It is going to hurt people, the very people who need it the most. The people who can't afford that $1,000 increase in taxes every year. The same people who, according to the IRS, that bottom 66% of the nation who pay 5% in taxes, who don't have the cash, they're the people who are going to be hurt by this. They're the people who are going to have worse income equality. And we have to be careful with these politicians because they play these games with us on a regular basis. But with that said, we're going to take a quick break. We should be coming back with Larry Ward of the Constitutional Rights PAC and also with the Stand with Tucker. And we're going to be talking with him about some of the things he's been working on. And I think we're going to have a great time with that. So I shall be back with you very shortly.